As Bitcoiners, we all know that liquidity is actually another word for government money printing and fiat, expanding the money supply. And so obviously Bitcoin being a very unlimited supply, capped supply of 21 million, it's going to perform very well under paper debasement.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Willy Woo breaks down the Bitcoin market on-chain signals, smart money moves, and price trends. Let's dive in and learn more.
You were listening into last week with this briefing. Not a lot has changed, slight developments, but mainly the structure's pretty much like last week. This is the yellow line here is the risk model that we have. The risk model is really sensing liquidity across the cycle, mainly on the buyer side. Basically, how much capital is coming in to support the price of Bitcoin relative to a sort of a 4-year cycle. And so when the risk goes up, that means liquidity relative to the price expansion is dropping off. And so when that happens, kind of the gusto of pushing price up starts to drop away. And you'll see this as a multi-month warning of a top coming. So in 2017, you could see that it was actually fired in the $2,000 range, even though the top was 20,000. And the risk would drop and then we'd fire up again, but it would chop around and give you a lead warning signal. This was a 6-month warning signal. In the last cycle of 2021, it fired in January and the top was November. So that was, 10 to 11 months there before it fell down. So even though the risk is climbing, the liquidity is waning relative to the price rise, it's not to say we're at the top. Obviously with global macro, we're going into recession according to the indicators, but the ship's not sinking right now. So most likely we are going to move upwards if you're a macro cycle investor. It's not really a double top as other people are seeing it, just from technical patterns. Fundamentally, it seems a little bit too soon.
Bitcoin's price took a sharp hit after U.S. President Donald Trump confirmed strikes on Iran's nuclear facilities, sending BTC briefly below $102,000. As the news rippled through global markets, crypto traders quickly reacted, with many bracing for more volatility. Bitcoin dropped to around $99,500 as fears of escalating conflict between the U.S. and Iran shook investor confidence heading into new trading week. Despite the initial dip, some traders remain optimistic. They point to previous moments of geopolitical tension where Bitcoin bounced back stronger. TraderCast app predicted a possible drop to the $93,000, $94,000 range, though he gave that scenario just a 20 to 25% chance. Others recalled how Bitcoin surged 42% in just over a month after the Ukraine war began in 2022, even during a bear market. Now, with Bitcoin above $100,000 in a bull run, there's speculation that history might repeat. Still, the pressure is real. Analysts are watching $97,000 as a potential key support level. For now, traders like Crypto Tony are holding positions above $93,500, but warn that $104,500 needs to hold for bulls to stay in control. With the weekly close looming, Bitcoin's direction remains uncertain, tied closely to both markets and global headlines.
And I will just move over to a more fundamental view of that liquidity. In this purple line, this is actually measuring the entire system of Bitcoin and how much capital it's absorbing in, right? And so actually here you can see that's 1 billion. we're currently absorbing $1.2 billion per day coming into the Bitcoin network. And it's not the actual rate of capital coming in, but it's actually the change of capital. Is that rate climbing or is it dropping? If it's climbing, then it's a bullish environment. If it's dropping, it's a bearish environment. And so we're currently in this sort of rollover, early signs of rollover, but we don't know if that's for real because you can see it can sort of sit around sideways and that changes every day. But as of the last month, it's been really flat. And because it's in a flat environment, we don't have this kind of tailwind environment. If it's bullish, there's a lot of spot buying and it's increasing rate, and it's like any dip tends to be bought up. And in an environment where it's bearish, there's headwinds on bullish action. Right now, it's been neutral, and it's actually been like that for a month. And in that environment, and in an environment where we have a lot of speculation. So if I go to this chart here, and look at this purple here, this is actually the speculation in the system, and we're coming off this zone where there's been a whole lot of speculation going into the top, a lot of late longs coming in, and we've been detoxing out of this sort of paper bet environment. And so we've been in this space where like it's just like tactical trader wars between positions. And so here in the heat map, the hot spots are where people will get liquidated, and you'll see it's kind of a random walk without any kind of tailwinds from fundamental capital flows coming to the network. And a lot of that has been purged, so it's a lot healthier than it was even last week. So, last week was up here. Now we're into the zone where it's starting to look interesting. So you really want to see the speculation down into the negative, like 1, 2, 3, 4 standard deviations from the norm. And so we're heading into that space. There's a bit of time to move. I'm not seeing this curve like start to initiate and get out of its purge. And once that happens, it's generally a good environment where we can rebuild a bullish base.
Michael Saylor has done it again. With just 4 words, "We bought the dip," and a graphic filled with his trademark orange dots, the strategy chairman sparked a wave of attention across the crypto space. His announcement came just after the company revealed it had purchased another 10,100 Bitcoin, worth roughly $1.15 billion, making it their largest buy since March. The move now brings Strategy's total holdings to a jaw-dropping 592,100 BTC, valued at over $60.8 billion. Saylor's timing was classic, dropping the hint on a weekend, just like he has in the past. The average price for this latest batch was about $70,664 per Bitcoin. With the market currently pricing BTC near $102,600, Strategy is sitting on unrealized gains close to 45%. Even though Bitcoin has cooled off from its recent high above $108,000, the company's position remains deeply profitable. So far in 2025, Strategy has added more than 140,000 BTC, showing zero hesitation regardless of market volatility. Bitcoin now makes up almost 59% of the company's $103.3 billion market cap. And with their NAV multiple hovering around 1.699x, investors are still eager to pay a premium. Saylor may not have announced another new buy this week, but one thing's certain: his accumulation game is far from over. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.